All right. Hello, my name is Nicholas Hodgkinson, and today I'm going to be talking to you about something that occurred in the early 90s in Japan called the Japan asset price bubble. So, what the Japan asset price bubble was a monetary bubble in Japan lasting from 1986 to 1991, where the asset and stock market prices inflated to such a high level that the monetary supply and policy could not keep up with in Japan. um, so this speculative bubble ended up bursting in 1992, and subsequently the economy of Japan took a downturn. And I'm going to talk to you today about a few of those reasons why. So some of the major causes of the Japan asset price bubble were a rise in asset prices, this being property, vehicles, stock prices, just about everything in Japan inflated during this time, which led to overheated economic activity, which basically just means that monetary policy, was very frugal, and lending was frugal, and there was a lot of money coming and going within the country, starting in about 1986. So this also led to, basically lending institutions within the Bank of Japan giving out a lot of loans, similar to the 2008, what led into that for the recession in the United States. So just a lot of loan giving to people that weren't necessarily qualified. And then there were some factors that amplified, this bubble growing larger. A lot of the aggressive bank behaviors what added to this. And then the policy agenda of basically that era in the country of Japan. So there were three major causes to the bubble. Number one was the surge in the asset prices. So this began with the stock market. The Nikkei 225 began accelerating the prices in 1986, and it hit a peak in 1989. As that bubble began to burst, because the supply wasn't able to be kept up with the demand needed, those stock prices began to fall, over 60% of their peak value, going down into the early 90s, the end of the 80s. And then the urban land price index peaked in 1990 as well. So this made housing and land prices nearly 4 times higher than they were in 1985, which is a dramatic increase in the price of land and houses. So there was an increased money and supply credit. This had to do with the banks giving out a lot of loans back in the late 80s. Business fixed investing was at an all-time high. There was a very sharp increase in housing investments. The M2 money supply, so cash deposits, mutual funds, and things of that nature, grew nearly 10% in a 1-year period leading up to this bubble. Bank borrowing increased, capital market financing increased, and the financial deregulation in Japan at the time, was aiding in this overall problem. So here's a couple charts of the M2 money fund. You can see in 1986, 87, 88, and 89, 87, 88, where that bubble ended up bursting. You can see how dramatically the increases were in those purchases of these M2 money funds. So, as well as leading from the early 80s all the way into 92, you can see at the peak of the bubble, bonds and those money mutual funds, the spending was at an all-time high, so as spending went up, demand went up, and the supply was depleted, of just about everything across the board. So the third factor in this was the rapid economic expansion at the time. Production was growing at a 7% annual rate between those years. It was the largest industrial boom since the 1960s in Japan. Fixed investments, asset investments boomed during this time. This led to a huge real estate development era for the country. And there was just overall large expenditures on consumer durables, especially in the household sector. So housing, cars, things of that nature. There was just heavy spending going into the late 80s. So the consequences of all this spending and supply not being able to be kept up with led to the asset prices ultimately plummeting in the early 90s. They became basically non-performing assets, so their value was so down that there was no money to be made on these purchases. And that just continued to accumulate. which led to financial difficulties and ultimately a recession through most of the 90s for Japan. So how that relates today, I compared it to the Great Depression, so we saw a lot of similarities. The stock market price obviously going straight up and then hitting a peak and then having a huge downfall, over 40% in both countries. Commercial bank loan lending was at all-time high in both of these examples. And then the stock market prices just dramatically decreasing in less than a year time period, which ultimately led to debt deflation, nearly 60 years apart, but ultimately right after both of these depressions occurred. So, and you can see the 1920s and then the bubble in Japan, how similar, some of the graphs in the stock prices were, where they went up super high, had a dramatic decrease. So we see this in the stock market today with COVID, but not so much of a bubble, more of just a dramatic event right now. And then what we can learn from this as a class, financial deregulation, we read about this in the last couple chapters. Over borrowing, the markets aren't able to keep up with this kind of economic stimulation, monetary stimulation. So the overheated economic activity can really leads to the supply not meeting, or the demand, or the supply not meeting the demand, which causes the prices to increase dramatically. And really a well-balanced monetary policy to counteract rapidly rising asset prices is key. So that's something we can take away and, try to avoid this in the future. When prices go up high, obviously, the debt ratios go up and we need to be able to keep up with this and have policies that reflect that. So in conclusion, basically the Bank of Japan, the Japanese monetary policy in the early 90s, rapid spending, hikes in the stock market prices, bad monetary policy. There's a lot of factors that led to this huge bubble that ultimately ended up bursting, and Japan saw somewhat of a recession over the last 10 years. So yeah, that's the Japan asset price bubble. And if you have any questions, go ahead and direct them to me, and we'll get them answered. All right, thank you.